Hello, everyone, and welcome to Women's Mortgage Network. This is Christine Beckwith, and we are very excited today to be unpacking an excellent topic that all of us are talking about in the mortgage industry, and that is how we tie marketing over to curing the pain points of our consumers. So we welcome you today. Thank you for being here, and we have two esteemed guests that I'm really proud to introduce. I think you know them, but I'm going to give them a proper introduction. First and foremost, Skylar Welch, senior mortgage broker with Main Point Lending. We all know she is a top broker in the country. She's been on many stages, a formidable businesswoman, many businesses, and she is here today to help unpack this wonderful topic. So, Skylar, thank you for being here today.
Thanks for having me.
Absolutely. And second up, Dr. Tasha Drummond, mortgage loan originator from Approved Mortgage Solutions. If you do not know Tasha, you got to follow her. She is an expert mortgage broker. She is somebody whose voice matters in our industry. She is educated and somebody that we want to learn about these important things. And so, with that, I'm going to hop right into this and start talking to you guys about the questions that I have. And the very first question is just to kind of set the table. But before I give you that question, I want to just say to the audience, the hardest part that we do is not creating the product or getting educated, even with our expertise. It is bringing the audience to what we do. It's solving the problem through marketing and getting those at bats that we need. And never more than in 2024 has it been more vital for us to figure these things out. So we're going to talk in two realms today, not only about what are the consumers' problems and what are the common problems, how we're solving to them, but how are we getting them to find us? How are we getting them to know that we have the answers to the problem? That is the definition of marketing. We can build beautiful things, but if the phone doesn't ring and we are the best kept secret, well, then we don't get to convert. And we really want to talk about results and converting today. So we're going to unpack both of those things. First question is going to go to Skylar, and Tasha is going to also answer it. They're going to both answer every question that I asked today. And so the first question that is up is, what is the most common pain point today for consumers reaching out for mortgage finance?
Well, I think that the biggest pain point for everyone is rates, right? We went into this time where we saw historic lows that people got used to. People were like, oh, I just said today actually to someone, I said, I remember when someone said to me, I'm not going to refinance yet. I'm going to wait till it gets to the ones. Right. Like those are the things that we're always battling something, right? Someone's always wants something better. But I truly think right now is a golden time, and this is how I'm really combating that opposition of people saying like, rates are too high to buy. The truth is that right now prices have started to level more than they have in a long time. More types of loan programs are getting more opportunities of going under contract. We're seeing, I just closed a USDA loan. I haven't closed a USDA loan in years because they haven't been given an opportunity because it's been so competitive. The competition has been so high. So right now, yes, rates maybe are a little bit higher, but they are starting to come down. They're lower than they've been in the last year. But as soon as rates drop significantly, if whatever happens, the floodgates are going to open. Everybody that has been sitting in the sidelines waiting for rates to drop are going to all come in and start making these aggressive offers, right? They're going to be making offers, and the prices that maybe we're at this point are going to go 50, 80, 100,000 over asking price. Well, now, sure, you may have a a point lower in interest rate, but you just paid $100,000 over asking price.
Mm-hmm.
The truth is, you're probably waiving inspection, offering appraisal gaps, all of these things that you're not actually having an opportunity. You don't have to do that right now, right? Seller paid closing costs are being negotiated right now. People aren't offering $100,000 appraisal gaps right now. VA, FHA, USC are being given opportunities, and you're actually paying a price of what the property is worth. You can always refinance your loan. You can never take back the fact that you just paid $100,000
Yeah.
of what it's worth, right? And I think that that's how I'm really combating that issue right now, is saying this is your golden time. Here's an opportunity. It's a short-term window where you'll have this interest rate for a short period of time. You can always refinance this property, but this is an opportunity for you to get into the property for what it's worth, negotiate with the seller, and also really be able to do your due diligence on the property and not feeling that pressure.
100%. And, as you're talking and you're unpacking everything for the audience that's listening in, it kind of draws us back to understanding again, we have leading questions. The consumers are coming into us and they're leading with the rate question. We've been there. And it was easy during the years when we could answer that question to a lower rate, right? It was about servicing. What do you have? What do you need? What do you want? What are you going to save? And today the question, and listen, I'm somebody that's been doing this a really long time and leading sales forces to do it. And it was always harder with the rising rate environment to take the consumer from the price question or the rate question. The only reason I'm introducing this during this pain point discussion is that I know rates are going to get better in the next 6 to 12 months. I mean, I don't have a magic ball, but based on all my economic understanding of what's ahead of us, it's coming. And so we've been kind of waiting for that because we want to have that volume. We want to have that easier stuff. It's been hard long enough, I would say. But we really have to master getting through that price question. As a career person that has done it for a really long time, when you can get good at interpreting the rate question as a what can I save, what can I do with my mortgage question, and I realize it impacts purchasing affordability. And so someone like Skylar, who does a ton of real estate purchase referral business, that is a hard conundrum to overcome. And she just gave you an excellent answer on how to kind of make them understand the sense of urgency of not waiting till there's some rock bottom rate in the future and thinking that that's the only thing that's driving your principal and interest payment. It's not. So many other things are driving it, and including when you're getting the refi rate question and you're saying, I think what you're asking me is that you want to save money. You want me to do analysis to see if you can save money or maybe consolidate debt, which I can do. You obviously know that rate is risk-based. You have a rate fingerprint. I'm going to find out what it is. It's the same no matter where you go, which we have a hard time saying as experts sometimes because we don't believe that necessarily because we know down the street maybe another broker or another lender or a credit union or a savings and loan bank has a different interest rate. But we understand that that's a teeter-totter between what they are being charged for fees, what their LTV is, what their DTI is, and all of the financial risk underneath there. So we can do a great job of making them realize if they're getting a better price quote, it is likely that money is coming in some other avenue of that loan. When we get confident about talking that way, people start to trust us. And when the trust builds, we get past that rate question and rate comparison, and we start getting into their specific service of providing them a really good price that they can trust and believe is something that they can take home. Tasha, what do you say to this?
Just to piggyback off of everything you guys had just said, we know that the buzzword is it's rates, rates, rates. What I would say is that it just takes educating, just like Skylar, you hit it on the nail on the head. It's more of explaining to them that, listen, yes, the rates are a little bit higher, but they're not forever. So what you want to do is you want to purchase now, grab the property because the supply and demand of the properties, you better get something while it's affordable because when the rates go down, you're going to be fighting to get a property. You're going to pay $100,000 over. It's going to be a bidding war. So to educate them and make sure that they understand that this is not forever. I concur with you saying that we're praying that the rates are going to go down soon, hopefully within the next 6 months. And that's what I'm telling my consumers. Hey, let's get you in. The rates are not that bad right now. You're never going to see, I don't know, I'm not God, but we're never going to see a 2.5 anymore. Well, we probably won't. So now that they're leveling off, this is a great time to grab that mortgage. Mm-hmm.
Great answer. And I would add to what you're saying, Tasha, is that, there is an average length of time that a homeowner holds on to their interest rate typically. And in the last 40 years, it's between 32 and 36 months on average. We are
Yeah.
at that place right now with the refi people that went through the lower rate mortgages that are holding on, white knuckling those low rates. They love their payment, right? They love the rate that they got. They don't want to move. But what has happened to their households is that their debt has risen
Yes.
dramatically. We know
Mhm.
statistically, nationally, that we're at an all-time debt high. And we also know that cash has dwindled. So every homeowner, there's only 3 or 4 events, and we need to know this from a fiduciary standpoint. There's only 3 or 4 events that make us get a cash flow, a waterfall in homes and rehash waterfalls. And so what I would just say is that if we're at the 32 to 36 month mark, which we are, and the debt is high and the cash is low, we have pain. Back to the topic, we have pain. Consumers have pain in this area. And so they can cure that pain. They don't have to wait for a matched interest
Mhm.
rate to cure that pain because they're paying higher interest on all of that debt.
Yeah.
They're in a position where they might have to borrow, or they're making sacrifices, or they're in real trouble with their cash position, right? They don't have the cash
Oh,
reserves. I believe we're 6 to 12 months from a lot of homeowners crashing into other financial problems because of the lack of reserves. And so we have to start to play on some of that pain. And
mhm.
when I say play, I want to be clear. I'm not saying manipulate. I'm saying bring to the surface in
Mhm.
our discussions this sort of thing. I'm going to move the
Well, and just
conversation to,
that, oh,
yeah.
I'm sorry. I was
No,
going to
go
say
ahead.
it was a pain point in the beginning when they wanted to refinance to pull monies out, but now they don't even question it. They don't even think about that 3.5 because they're just trying to breathe. So you're finding that the refinance boom, it has changed
Yep.
significantly over the over the last couple of months because now people are just like, you know what? I just need to pay off some of this debt. We're drowning.
Yeah. Yeah. Excellent points, guys. We're going to move into the marketing part of this conversation. What I want to go back to Skylar, and then we'll go back to you again, Tasha, is how do you market to draw in the client to meet these needs that we're talking about and pain points? What are you doing? What is working?
Yeah, I mean, so something that I think that people struggle with marketing, right? I mean, marketing is however you choose to do it. Social media is so heavy, video content, blah blah blah, all that, right? I think a combination of um, personal touches with social media and all of that is really important. But I think that where people really lack in is the focus in marketing. I think that it's extremely important that, let's just give an example. Let's say that you want to focus, you say, I want to market something, and you put one video out and you're like, I'm going to get all this business from it. And then you move on to something else. That one video is not going to get you enough traction to actually do business. How I really like to focus my marketing, and I think what's really worked, is choose one topic per month, right? Like let's just
Mhm.
choose one random topic. Let's talk about this was one of my husband's favorites that I did, was when I focused on divorce attorneys, right? And on divorce, he's like, Skylar, if you make one more video about divorce and I get one more call from my friends that your wife's making all this money. But the thing is that for that entire month, I put my entire focus there. Not just saying that I'm making video content on it, I'm also making my focus that my outgoing calls that I'm marketing are for divorce attorneys. Who I'm sending mailers to are based on that. The social media content that I'm putting out is based on that. The meetings that I'm having are with people that handle these things. My entire focus is there. That those following 2 months, I closed 6 cash out refinances from divorces because I put that out there, right? So let's just say you're focusing on FHA streamlines right now. You should, one, be making your social media content on FHA streamlines. Two, you should be reaching out to every single past client that you have that has an FHA loan. Three, you should be doing, whether you do mailers, you do whatever you do, put your entire focus on that, right? Because if you just put one piece of content or you put one focus on it one time, you're not going to reap the results, because consumers take things in and need to take things in a not just one time, right? Like think about when you look at something on Amazon and then you get like a million ads for it and they're like, shit, I need to buy that, right? It's that same thing, right? They need to digest that material, and
Yeah.
then it triggers in your mind like, wow, they do that. Like if I make content on VA loans, you better believe that I'm getting referrals from VA buyers and from real estate agents saying that I'm a VA professional because I make content on that and they've seen it multiple times, not just one time. So whatever your focus is, however you're trying to reach that consumer, do it in a methodical way. Do it in a way that you're You're not just throwing random stuff out there. I highly suggest like make a 12-month calendar, and that's 12 subjects. 12 subjects is easy, right? I think for us as people who create content or create marketing material get burned out is like, I don't know what to do next. I don't know what to do next. Like I'm out of ideas. But if you just have to come up with 12 ideas and your 12 ideas are focused around that, which is all of those things, right? Like if I'm saying I want to focus on PA, then I'm going to not just post a video on that. I'm going to then do my marketing material on it. I'm going to then do my daily calls on that. I'm going to do my reach out on that. And my mind is focused. When your mind is focused and your business is focused, then you're going to see the results.
And, I want to just expand on what you're saying, as somebody that coaches on marketing expertise, one of the biggest things we have to overcome in sales is the idea from an egotistical standpoint that I'm nauseating on my social media because I'm doing, all these videos, or I'm repeating myself. We somehow ineptly think if I put up a video, everybody that I know has seen it once, and I don't need to put it up there again.
Right.
And I had to learn that as well. And so you're talking about drip marketing. And there is a statistic, I don't know what it is, so I'm not going to quote it, but there's an iteration of time whereas the consumer is being warmed up. Now, if I use a little bit of an analogy, back, 20 years ago, people were using the Sunday newspaper to buy cars and look at real estate, okay? And they were looking every Sunday, and they weren't just getting in their car to go buy a house when they got the newspaper on Sunday. They were looking for a while. They were watching. This is the most rudimentary way I can explain drip marketing. They're thinking. They're looking at the prices of the cars. They're looking at the prices of the houses. They're seeing what's going on and off the market. And it's, it has an iteration. The same is true with our digital social marketing and all of the ads and all the CRMs that we're sending out. They're thinking. And we may get them thinking on ad number 1. And by ad number 3, they might have had a conversation with their spouse. They might have decided they're ready to call you, but then forgot. And then your CRM comes through and they're like, oh, I got to call. And then there's that sense of urgency and that thing happens. And so one last thing I'll say before going to Tasha too, you should have 3 niches. Again, something that I have always focused on is a champion and challenger marketing plan. This is for organizations. This is for small businesses. This is for single originators. This could be for whole national firms. You have to know what works. And of course, what works right now is different than what worked 3 years ago, but you have something that's working and you need to do more of that and longer periods of that. And you also have to have the challenger, the thing you believe will work. It isn't a test. It isn't something you doubt will work. It's something you also believe is going to work. And you need to do 2 of those. So 1 champion marketing and 2 challengers. The challengers are going to become next year's champion, because here's the thing about your champion. No matter what you're doing, your champion is going to fade. Your champion marketing campaign is going to fade. And as it begins to fade, just like for 3 years, it was low rates, right? As that champion began to fade, if we had the challenger 2 and 3 sitting there, we would have pulled those into place, right? And we would have been able to bring those sales funnels in. So I urge you, if you're watching today, if you're taking down nuggets, and all of this is great that's being shared, get a champion, challenger marketing going. Do it on a drip marketing level. Tasha, what do you want to add to the discussion?
The only thing that I would say that's a little bit different, that I'm doing that's a little bit different, is that we have generational marketing. So social media and the content is very important, but I'm finding that I'm doing a lot more in person, because you have your baby boomers, you have your Gen X's that really aren't savvy on content. And so I'm finding that I'm getting more invites to come to some of the social spaces and educate. So
that's great.
yeah.
I want to keep you right here. I'm going to start with you on this next question. One of the questions that I had was, how much therapy are we doing with consumers, as far as helping them with their pain points? We really have to have our hats on this year with helping them and in talking about some of their common pains, which we started with rate. There's also what I said, there's high debt and there's lack of cash reserves. There's people that are feeling stuck. There's people that want to buy, can't find a home because of inventory. How much of your support hat has to go on? And also, how purpose filled is that work? It's meaningful work this year.
Yeah, it is. So you have number one, it requires a lot of patience, and you have to put on the hat almost of a counselor. I mean, literally, I feel like a counselor because you're getting people within from all different walks of life that are feeling and experience the same pain points, and they really don't know which way to go. They don't know what their options are. They don't know if they have options. So we want to sit and we want to be good listeners.
Yeah.
We want to listen to what their concerns are, and then we assist them with finding options and solutions for their pain points.
Yeah.
Biggest thing, and I'm finding a lot of people just don't know that equity is a savings. Like literally, why are you drowning when you have $3,000, $4,000 in equity? You
Yeah.
know, you can use that. That can change your the trajectory of your financial situation. So use those resources. But if you don't know, you just don't know. And I'm finding that a lot of people don't know. They were taught to um, pay off their house in 30 years, and I'm talking generational. Uh, 30 years, we're paying off this house. I don't want a mortgage.
Right.
And kind of educate them and say most people are going to have a mortgage, especially when you're in different um, areas of the United States. I'm in South Florida, where it's very expensive to live. A lot of our baby boomers purchase condos. They can't afford the HOAs. They can't afford the taxes, so they're forced to think about something other than paying off their dwelling.
Yeah.
If it's going to save your property, you may have to refinance. It's okay. It's okay. If it's going to keep shelter over your house or over your head, you may have to go ahead and refinance. So those are the
Yeah.
pain points, and just being patient and being a good listener, it's working. It helps them.
Yeah. Very meaningful advice. And I would tell you that I could go down a whole rabbit hole about grandfather's mortgage advice, living through that. We know today that paying your mortgage off is not a good financial strategy. We know that waiting until you're old and feeble to capitalize on having no mortgage payment, which we understand, we get into retirement and our income means are lesser. And so we want lesser debt. And of course, we don't want to leave our kids in debt, which is the number one reason that people are trying to pay their mortgages off before they die. And we know the solutions to all those things, but we don't want to lose our tax vehicles, right? We want to mine the equity out of the home while we're, thriving and can invest and use it towards our future wealth and debt and those sorts of things. I've heard incredible stories this year. I've sat through so many conventions and so many town halls and Zooms and collective community things, and just horror stories even. It is hard to front an industry and an economy like we are in from the housing standpoint. I think we've done a really good job. I'm really proud when I look around the community at all of the people that are in it and doing meaningful work. Skylar, you must be experiencing some of this. What do you say on this topic?
Yeah, I think a couple of things, like in addition to having to be a therapist in a way, like, right, like my big focus, like I feel like everybody knows, my big focus is giving this experience, giving this very personalized experience, making every client feel like they're my only client because they're getting that attention, right? And like we're running numbers on every single property that they're looking at. We're making them feel comfortable. My main focus is always like, what is the comfortable monthly payment for you? And like, let's find a purchase price to get you there so that we can send you off and you can feel confident shopping. But in addition to that, like therapy piece and like really keeping them encouraged, is being like a big cheerleader and like a coach and like a pump them up, right? Like people are
100%.
so down on themselves that it's more just like, you've got this. Like, let's like, don't get discouraged by losing out on 10 properties. They weren't the right properties for you. And keeping them motivated, I think is just as big of a piece as like talking them through things, right? But in addition to that, I think we're having to do that same thing for our real estate agents.
Yes.
My referral partners are literally like lean on me a lot for help with that. So what I go to a lot with these agents and what makes me really, really valuable to them is I give them the ideas of how to go get more business, right? So I could go to them and say, hey, I have this product, right? I have this DSCR product, just an example. Like I have this DSCR product. Here's what it is. Here's a great like avatar of who would be a great referral for this. Who in your database meets this criteria? Go tell them you have a product for them and then go find them a house to buy it with that. Or, hey, we have this great no money down product right now. Who are all those buyers that you have that were shopping for FHA or USDA? We now have a conventional option for them. Go find them a house. Like giving them giving them like a product to use or a idea to use for them to go market, because ultimately that's where a lot of our business is coming. So if I can motivate them, if I can give them a resource and give them a way to bring in business, that just ultimately results in more business for me as well. So I think the consumer direct way, but also like providing that resource and that motivation and that those ideas for our referral partners too is very valuable.
Yeah, it's so meaningful. And I'm so glad you brought up the realtor connection on this, because I think this is a year of opportunity for the mortgage industry to really raise its level of expertise, to be the helper towards our realtor partners. They don't know how to front this industry any better than we did, going into it 2 years ago. We're finding our way and we're leading the way, and we can take that leadership stance and come up with partnerships and solutions. The one thing I've learned in 38 years is that when there are markets like this, it breeds extreme opportunity for the future. I want you to hear me. I was listening to a real estate economist yesterday at my own Boston Difference Maker, incredible national broker, renowned, and he was talking about the bust and boom theory. And what was really interesting is that if you look historically, what comes behind every bust is a bigger boom. And so we all need to realize what's coming. And we kind of started here. It's coming. What's coming? More. More is coming. And so whatever we've been doing for the last 2 or 3 years with putting our rain buckets out, there's been people that rolled their whole sidewalk up and left the industry. And I understand that. I understand there's mortgage originators that needed to do that. And I bet there's a lot of you that are listening right now that are saying, man, it's been hard. It's been hard to stay. It's been hard to work on a commission base and work 8 hours a day when I used to be able to do it, for 4 and get, 10 times what I'm getting right now. And so I'm here to tell you, stay put and keep planting your marketing seeds, keep thinking about the pain points that we're here to cure. This topic is relevant. It seems so vanilla, but I'm telling you, it is in the basics of all of your businesses, the foundations of what you do, that you are going to build the future that collects that boom that is coming. You need to make haste right now to make sure all of your workflow, all of your marketing, all of your staffing, all of the things that you might have not had to work as hard through a lower volume market are strong and ready. You are readying the troops for what is about to come. Your market share of what you have done will be very prevalent and obvious in the next 6 to 12 months. If you've been there, even if you haven't been converting, but you've been the voice. You've been the voice to your clients. You've been the voice to your realtors. You've done the marketing or are doing the marketing. You will be sought after. They're going to remember that you were there. So with that, we are going to conclude, and I'm going to give each Skylar and Tasha a chance to say final words to the audience on this subject or any additional tips that we didn't cover. Skylar, why don't you go first?
Yeah, I think the biggest thing with all of that is that I think so many times people are like, I'm slow. I'm going to go home, right? I'm slow. I don't have anything to do. I'm slow. I don't have anything to work on, right? When you're slow, that's when you have to be working the hardest. You have downtime. You spend those hours prospecting, right? Those downtime, you're like, I don't have any contracts. I don't have enough. Well, guess what? You're never going to have enough. You're never going to have more if you're not prospecting during those downtimes. Your slowest times need to be your busiest, because then you're going to remain busy. I remember for years, I don't know if it was years, but I went through this time where I would close like a bunch of loans and I'd have a terrible month with no loans. I'd close a bunch of loans and I'd have a terrible loan with no months, because I'd be so focused on that pipeline that then the next month I'd be like, what's wrong? I wasn't prospecting during that time. I wasn't keeping in touch with who I needed to be keeping in touch with during that time because I was so busy. So once I made that change and I realized no matter how busy I am, no matter how many loans I'm closing that month, I'm always going to be dedicating that time to prospecting. My months just started going like this, and I was always having that same level of months. And I think that right now is such a discouraging time. Right now is such a time, it's like, I'm just going to go on the boat. I'm just going to go to the beach. I'm just going to spend a day off. I have nothing to do. You're never going to have anything to do if that's your mentality. You have to be grinding the hardest right now. And then you're going to see those results, because so many people aren't. And if you're one of those people that are, then you're going to see the results.
Okay. Yeah. Yes. And I would say with that, because we know that everybody's a little bit discouraged in the industry, but it's important that we still educate and encourage them to move forward, because ultimately the long-term impact of home ownership is building wealth. And that's what I'm saying to a lot of people. I don't want to buy, I'm over this, it's too much. But I'm saying, listen, in 30 years, in 20 years, home ownership, if you own a home, hey, you're building wealth. You're developing something for your retirement. So don't be discouraged. The long term, the short term impact seems impossible, but encourage your buyers, your borrowers to go ahead, make it happen, because it's building wealth ultimately.
That's awesome. Well, thank you both for your expertise and for being here. And to the audience, I want to say just a couple of final things. Yesterday, I heard a speaker talk about the pain point of the consumer, and they were talking about the children that live in the homes that we serve and the industry that we serve. We all got into this industry because we wanted to give the American dream. We wanted to give the American dream of home ownership. And this person talked about his own story of living in a one-bedroom apartment with a foster home, and then moving into a mansion with a family member, and then later, early in his teen years, going back to the one-bedroom apartment. And he talked about emotionally how that made him feel as a child, the difference of those homes. And he was speaking to an audience of realtors, real estate brokers, and mortgage professionals. And he said, if you don't think you make an impact on home ownership, I am here to tell you my life changed when I was in an environment that I could be proud of. So at your closing tables, look beyond the people that are signing the documents to the little kids that are sitting in the chairs who are excited to move their toy boxes into those beautiful rooms, because that is one of the most beautiful things that we do in curing the pain points. We are solving to housing. We are solving to the roof over people's heads. And that is a meaningful job. And when we tie our work back to our meaning, we do it in such a more powerful way. Finally, I want to thank you for joining us today, staying with us the whole time. Please be a member of the Women's Mortgage Network. We're headed to New Orleans for Fuse, and we're going to have an amazing conference. And Women's Mortgage Network is going to have its own 2-hour segment on Thursday. We hope you'll come. We're going to be getting tactical, and we're going to be getting down to tactics on leadership and building your business. And we hope you'll come. Our tagline is "We're on a mission." So please join our mission. And thank you so much. And thank you, Skylar and Tasha. And thank you for having us.
Bye-bye.
Thank
Have
you.
a great day, everyone.